Hey everybody, welcome in. Listen, I'm flying solo today, so Bill is out on the road. He's actually speaking at multiple conferences as we speak. So listen, today I'm going to talk about the one strategy that took this commodity trading company into a legend. So the company that I'm talking about is Louis Dreyfus. They got started a long time ago. The original Louis Dreyfus figured out how to arbitrage sugar between two locations. So I'm not going to go into detail on that, but if you want to learn a little bit more about that, drop me a comment below. But this is a strategy that I've seen a lot of companies emulate and attempt to do. Louis Dreyfus is a company that executes this strategy flawlessly, and it's because they invest in it. So you can always look for a super secret, like a supplement. You can look for a super secret pill to make you wake up in the morning, make you thinner, make you more fit. But ultimately, it takes a lot of work. Whatever you're trying to accomplish will always take a lot of work. So anyway, that's what we're going to talk about today. So let's go ahead and dive into it. So the fundamental reality of trading. So the challenge is most traders either thrive in a technical sense or a fundamental sense, leaving significant blind spots to the strategy. The opportunity is combining both of those together, fundamentals and technicals. Sometimes they are aligned, sometimes they're misaligned. And when they're misaligned, that's when opportunity is available to you. So it creates a comprehensive view that opportunities that others would miss. If you're not watching both, you're really shortchanging yourself. Now, there's ways to be successful in the technical arena without fundamentals, and ways to be successful in the fundamental without the technical. But those are very difficult and a little harder to do. But when you blend them together, it really makes a magical formula. So the reality is implementing a unified strategy requires significant time, expertise, and financial resources unless you have the right solution. More on that a little bit later. So technical traders, this is kind of the progression path. So let's take a look at it. You start at the novice level, and that's where you learn a few indicators, a few patterns, some basic chart reading skills. You start to see where support is or resistance or pivot points. And then you can even identify simple patterns like a head and shoulders or a cup and handle. And then you have a limited understanding of the market context. So this is kind of the novice level. This is where everybody starts on the technical trading side of the business. If you want to learn more about technical trading, drop me a comment below. I've got something for you. So then you transform into the intermediate level. This takes years to learn a complex technical system. There are literally hundreds of technical indicators. So then when you think about the combination of that, I don't know how many different combinations there could be, but 100 times 100, I mean, there's a zillion different ways to look at the technicals. So it does take years to learn a complex technical system and have advanced indicator combinations, multiple time frame analysis. When you look at it from a 10-minute chart to a 4-hour chart to a daily chart to a weekly chart, you come up with completely different viewpoints. So that's why time frame is super important when it comes to technicals. Complex pattern recognition is another attribute here, where you're looking at channels, you're looking at retracements, that type of thing. And then the master level, this takes decades to see what I call the matrix. This is intuitive market understanding, pattern anticipation before formation. You see it before it's actually formed. Unconscious competence in trading decisions. So that is the technical path. So now let's take a look at the fundamental path. The novice, basic supply and demand. You look at basic supply and demand, storage, that type of thing. You follow major economic reports or reports. If you're following natural gas, it may be the storage report. If it's oil or products or diesel or gasoline, it's the petroleum status report. And these are simple causal relationships. This is a very binary way to see the market: oversupplied, undersupplied. Then you have an intermediate level. This takes years to learn, where the variables drive the market, identifying key drivers such as decline. When you're measuring supply on oil and gas in particular, these have a declining effect without mechanical interruption or enhancement. So then, if you're not following that or you don't understand that, you may see production go up a little bit. Well, then production is rising, not realizing the economic engine just to get up there, because a lot of that economic engine is replacing what they're losing every single day. Then you have a demand curve. Now, the demand curve is taking a look at growth opportunities. For instance, I'll grab something off natural gas this year. When you're looking at the demand curve, the past 3 years, every summer, we increased our power usage on natural gas. So every summer we were looking at that. As we were approaching this summer, one thing we alerted our membership to is the fact that this summer could be different. The solar build out and the wind build out may actually be enough with the new battery technology to actually curb some of the natural gas demand. And what did we see? We only matched levels from last year. We didn't exceed them as we have the last 3 years in a row. So looking at dynamics like that are a little bit more harder to see, because they're not just released in a report somewhere. Cross commodity correlations, this where natural gas and crude oil. If crude oil goes down, natural gas could go up because of a lack of associated gas. Seasonal patterns and exceptions. Then you have the master level. This is the matrix on the fundamental side. This is predictive market modeling. This is identifying a paradigm shift. This is intuitive understanding of complex intermarket dynamics. So these are the fundamental paths. Now, the technical trader's reality. What are the strengths? Short-term trading success. In a short-term window, there is going to be success here because technicals do work in a short time frame with precise entry and exit points. Plus, they have effective risk management. So that's the strengths. Now, the weaknesses. They're blindsided when fundamentals drive the market. They miss bigger, longer-term moves. One fundamental signal missed equals huge losses, and a limited understanding of why markets move. And this is a key thing that we see with a lot of traders out there, that they get started and they have some success. And let's take 2022 on the natural gas. I'm going to use natural gas again. 2022, natural gas went up to $9. There was no fundamental basis for us to be at $9. However, some of the technicals actually pointed to 13, 14, 15. And the fundamental traders knew that it would turn. Now, when? I don't know. Yeah, that's kind of the dynamic, but they knew it was not going to continue in that direction because there was no fundamental support. So that is where a technical trader breaks down on the weakness side there. So now let's look at the fundamental trader reality. Longer term success, longer term windows, 3 months, 6 months, 12 months, a deeper understanding of the market drivers, a better anticipation of major shifts. And then you have the weaknesses. They're frustrated when the fundamentals don't play out quickly, or if the fundamentals are signaling something, but the technicals are driving the bus. So each market in the energy space, sometimes technicals are running the show. Sometimes fundamentals are running the show. So you can often get frustrated because it takes patience to allow the fundamentals to impact the market sometimes. Then you might miss shorter term profitable moves, such as the technical trader can take advantage of. One technical signal equals a huge opportunity cost. This is death by 1,000 cuts and poor timing. And now the unified approach. This is the technical requirements. You learn how to read all the technicals and then you track them. You do multiple time frames, key support and resistance, momentum indicators, volume patterns. These are some of the technical requirements. Now, here's the solution for fundamental requirements. Track all the news, Reuters, Bloomberg, Trading Economics, FX Empire, bar chart. There's probably 50 others. Track all the fundamentals, production data from Texas, Oklahoma, Louisiana, New Mexico, Colorado, Wyoming, Utah, and others. Baker Hughes rig counts, EIA inventory and production reports, and demand reports, weather patterns and forecasts, pipeline flows, constraints. Now, here's some of the success stories that we've heard. By combining technical timing with fundamental thesis, we increased our win rate from 62% to 87% and more than doubled their average profit per trade. And then we also avoided 3 major drawdowns last year because the technical signals warned us before the fundamentals played out. It's a complete game changer. So here's the harsh reality when it comes to energy commodities. So if you are purchasing energy commodities for your company, if you're selling energy commodities for your company, or you're trading or hedging or moving those and you evaluate commodity risk. So that here's a harsh reality. There's a time investment. You need to dedicate 2 to 3 hours every morning before the market opens and 2 to 3 hours every afternoon after the market close. That's just a time investment. You need to evaluate and absorb all the news and every movement that happened throughout the day. So there's like a pre-game plan and a post-game plan. Then you have a team investment. Build a research team for comprehensive coverage of all those variables. A financial investment. You could subscribe to Wood Mackenzie, Bloomberg, Reuters, NGI, Platts, Argus. I know because I have subscribed to those over the years in the industry on the trading side. And typically when you start adding those up, it might be $10,000 to $20,000 a month. And that's a very expensive investment. So then you have expertise investment, years of learning in practice, both technical and fundamental. These are some of the gatekeeping that keeps people from knowing what is happening in the energy markets. So this is where Rogue Radar shines. So I'm Brian. We're with Energy Rogue. And if you click the link down below, you will go to this page. This page will tell you a little bit more about what we do, how we do it, and why it's a little bit different. So we do have a very simple solution, and it's called Rogue Radar. This is only $89 a month. So right here, it's only $89 a month. If you are a little bit more experienced and you want a full, robust dashboard, that is going to be $179 a month. But I'm going to talk only about the Rogue Radar. So today, what I'm going to walk you through is what is Rogue Radar? What do you get with it? So here is Rogue Radar. So we have a membership program right here, a subscription, and it is Rogue Radar right there. Rogue Edge is down here, and I'm not going to cover that, but I'm going to talk about what is inside of Rogue Radar. So first, at the beginning of the week and the end of the week, you actually get a video deep dive to where I go into the markets. You can see me talking about the markets right there. And at the beginning of the week, you get a Monday game plan. This is going to give you levels This is going to give you levels that you're going to talk about, or not talk about. These are going to be trading levels in the marketplace for crude oil, natural gas, and NGLs, plus a little narrative about what direction we might be going. Then a full comprehensive chart update that gives you everything that you're going to want to know when you start the week. So that's what I'm looking at when we start the Monday game plan. This is what I look at every single Monday. Well, I look at it because I create it, but then also I do a companion video on Monday. Then a little bit later in the week, natural gas storage is released, the petroleum status update is released, and then we publish our Rogue Radar, which this is going to be a little bit more comprehensive, and this is going to talk about what is happening on, for instance, on natural gas storage, weather, production, imports, demand, LNG, Mexico, international, European storage, all of these factors, where we are, what the outlook is, what some of the notes, and then we talk about where we are, where we've been, where we are, and where we're going. We talk about that every single week. Then we talk about what could be bullish, what could be bearish, and then I give a firm takeaway of what I think is playing out in front of us. And we do the same thing on crude oil, where we've been, where we are, and where we're going. And we have these convenient red light, green light signals that tell you, well, commercial stocks are in a bullish a bullish stance, whereas U.S. imports and global supply, those are bearish. So that is just one factor, but the real magic happens right here. So every day when we were talking about it, every day this runs, and this gives you a technical analysis, fundamental analysis, weather analysis, economic analysis, CFTC analysis of whether or not the hedgers are long or short, LNG, news and sentiment, Fibonacci levels, machine learning price prediction, an AI analysis, and today's update. For instance, this is today's update where we talk about how we plunged, and plunged to a 9-month low, and then it actually covers things for energy traders, for producers, for consumers, and for commodity professionals. So this summary happens every single day, and along with that, I don't know about you. Do you have time to read 72 articles? Well, our AI does that. It does that for you every single night, and it gives you an overall sentiment. And that sentiment is what all those articles represented. It, are you looking at TTF or JKM on natural gas? Those are going to drive U.S. natural gas prices. Do you know if managed money is increasing or decreasing? What is the sentiment of the positioning on the CFTC positions for natural gas, which is bearish and strengthening, and crude is bullish and strengthening? So you can go through this every single day, plus have a rolled up technicals on moving averages, MACD, volume versus 20-day average, the stochastic ADX, Williams percent R, Bollinger Band. So all of these is running every single day for crude and for natural gas. And what do you have to do to get this? Well, it's $89 a month, and this is going to save you 30 plus hours a week of research. And guess what? Click that button, 14 days for free. So listen, I'm Brian, and I hope that I wish you well on your journey. If you want to learn a little bit more about Energy Rogue, just click to the buttons down below. If you want to learn a little bit more about us, feel free to drop a comment, and I'll reach out to you. So listen, thanks so much. Really appreciate you spending 20 minutes with me today, and I hope you have a phenomenal Wednesday and have a great one. And I hope to see you inside.